My name is Arthur Slade. I'm with the Department of Insurance, Securities, and Banking in Washington, D.C. And our role as a regulatory agency is to ensure that insurance companies comply with the terms and provisions of the contracts that they issue and that they're licensed in the District of Columbia. We also have a branch that deals specifically with securities and securities fraud, as well as banking, as we house approximately 2 banks in the District of Columbia that have licenses here. But today we'll be talking about insurance issues for small businesses. As a small business, you're going to need to have some type of coverage, generally, specifically, and the biggest threat for your small business is going to be liability issues, whether it be manufacturing, whether it be any type of services that you render. So we're just going to give a kind of a broad overview of the insurance aspects and of the business and what you need to consider specifically in your business plan as you turn over employees, as you make progress in your profit margin and things like that. We're going to touch on workers' compensation insurance, business property liability, auto for commercial vehicles if you have any type of delivery system, group health and disability insurance, group life insurance, and home-based business insurance. Now we'll just touch on the Affordable Care Act briefly because I know the next presenter will go in a little bit more in depth with the details of the impact that it will have on you, whether you're a small business or a nonprofit small business, because there are going to be different rates that I believe that are going to be applicable should you decide to get group insurance. And there are some benefits for you and some fines that are applicable as well. One big thing is workers' compensation insurance. Now, the District of Columbia has its own workers' compensation division. So, and insurance rates for workers' compensation insurance is provided through another carrier called NCCI. So, depending upon your business, whether it be, and I can think of an example where I had an issue with a dance or production company that had some rates that varied for people that were actually doing the production and people that were on stage, because they were grouping or classifying all these people as one category. And the majority of the risk may have been associated with the people that were on stage, the dancers, versus the people that are behind the cameras, doing the production, setting up the stage for the actual event. But workers' compensation is going to cover your workers and employees for injury or illness, employer's liability, work-related injuries not covered by workers' compensation, such as paying for damage for wrongful death, suits against negligence. And this is going to be the biggest impact on you as a small business owner. It's nothing like having your own business. You get off the ground running, and then you're handed suit papers to answer, and you have to defend yourself with court costs. Workers' compensation coverage for your employees is going to cover lost wages, rehab, independent contractors, unpaid volunteers are usually exempt from workers' compensation eligibility. And when you first purchase workers' compensation insurance, the rate will depend on your payroll. Now, as I indicated before, that's going to be set by NCCI. And I'm sorry I don't have the acronym available, but I do know that they set the rates based on the classification of the workers that you have on your payroll. So if you have if you're a florist, your rates are going to be a little bit different from, say, if you're delivering construction items. So your risk is going to be a little bit different. If you're delivering goods and services for construction sites that they require, and they require drywall, paint, etc., and they have a commercial vehicle, I mean, your exposure is going to be a little bit different versus someone just delivering florists or flowers on a daily basis. And most businesses in the district are required to carry workers' compensation insurance. As I stated earlier, it's going to be up to you to contact the Workers' Compensation Division to find out exactly what the laws are specifically for your business, but you're pretty much going to be required to carry workers' compensation insurance. Now, property insurance is going to cover your actual business. Now, if you own the building, this is going to be something that's going to be big for you because you're going to need to cover the property itself and the liability exposure that comes along with it for you being the principal owner of that property. Now, if you're leasing, the landlord is going to take some of that responsibility, so you're going to have some type of coverage for when you have customers or consumers walk into your establishment. So it's going to be a little bit different liability if you actually own the property versus if you're leasing the property. Inventory, furniture, and this is going to be big. Your inventory and furniture for the property insurance, if you say you have a catastrophic event. Lately, we've been experiencing strange weather patterns in the District of Columbia. Some of those events may be covered under the contract that you have for business insurance. So if you have a tree that falls and damaged and impacts your property, or say a total fire, and you're in commercial lease space and mixed-use development, and there's a fire loss, that's going to cover your damaged property in the event of a loss. Now you have a basic form, broad form, and special form. Now you'll probably have to go to your insurance broker or agent to determine exactly what your needs will be, because that's going to be dependent, again, on if you own the property or if you're lease spacing. So it's going to be contingent on that. So you have to go over your individual needs of, okay, this is how much inventory I have as far as my business inventory. If it's cyclical, you know, do you experience an influx in inventory during the holiday seasons? Maybe your busy season is now. Your high season may be the summer months. So that's going to be something you run past your insurance professional. Oh, one thing I did not touch on that should be noted: actual cash value versus replacement cost. Typically, insurance policies are going to pay a depreciated amount based on what is the market value for your inventory at that time. So if you have a television set, and I'm just using a flat screen, an old HD television set from, say, 5 years ago, the replacement value is going to be depreciated until you actually replace the property. So if you have a new HD flat screen TV, it probably will be paid at 100% at the time of the loss. But here again, what would your inventory be worth if you decided to try to sell it on the open market? And that's something you have to do as a business owner. You have to go continually and look at your inventory, see how old things are in your business, because it's going to be impacted should you experience a total loss. Liability insurance, bodily injury, damage to property of others, personal injury, medical payments to tenants, and legal liability, product and completed operation. Deck builders forget to secure a railing, fire legal liabilities, employee space heater, damages, landlord billing, and general liability, a customer that actually trips and falls on your property. I think this is probably the major impact of small businesses, because you're concerned more so with your overhead and your expenditures. You have your costs are fixed. So your accounting principles are going to be to minimize your overhead, to try to increase your profits and maybe reinvest into your business until such time your profit margin grows. But the liability exposure that you can experience from a small business level is going to be extremely different from a chain operation such as Walmart, because they're going to have attorneys on staff. They're going to have someone defend them, as in the case of the liability that they've been exposed to in New York from the comedian that was injured. Tracy Morgan was injured in that accident, a tragic accident. So they have attorneys on staff. The general liability policy is for you to step in to contact your insurance company, who has attorneys on site or at their disposal to try to defend you in the event that you have a loss. So I would dare say that this is probably one of the most critical pieces for a small business. Compensatory damages for financial losses, general damages, non-monetary losses, and punitive damage if you're penalized for being negligent, if your business is found negligent. And hopefully you have your business constructed, whether it's for tax purposes or as an LLC, partnership, sole proprietorship, however you have it formed, that's going to impact the exposure of you as an individual business owner based on the construction or the format of your business. Now, the standard liability does not protect against sexual harassment, wrongful termination of employees, failure to employ or promote, or race and gender lawsuits, claims related to operating an automobile or truck, professional liability insurance, or errors and omissions insurance. And errors and omissions insurance is say if you have a fiduciary responsibility. As the previous speaker mentioned, I have my chartered life underwriter and chartered financial consultant. If I did not work in the public sector and say I wanted to solicit clients, I would owe them a fiduciary responsibility based on the credentials that I have. If I breach that fiduciary responsibility, and based on my knowledge and skill set, I gave them some type of financial advice that they felt as though it was not in their best interest, that's where my errors and omissions coverage would kick in. If you're a professional offering services and guidance to your customers and you have a client base, that's above and beyond your general liability coverage, because people are relying on you and your expertise for guidance in their profit for their individual needs. Business interruption, as I mentioned, if your high season is in the summer months, or say it's during the holiday season and it's a cyclical business, this is going to have an impact if you have a total fire loss and you're out of business during your high season. Now, that's where you have to have a good accountant on staff that can supply your receipts and all of your inventory and your sales to the insurance company, because what they're going to do is they're going to come in, take a look at your books, see what you did in first quarter, second quarter, third quarter, fourth quarter. Now, if you're a cyclical business and you rely upon the profits that you make during the summer months and or the holiday season, that's going to be the most critical part of your quarterly report. And this is going to kick in your coverage to help you sustain your business while you're being impacted and shut down as a result of a loss. But it has to be a covered loss. So this is, here again, when you talk to your insurance professional, am I covered for a fire loss? Am I covered if a tornado comes through? Am I covered for an earthquake, which more than likely is not going to be covered? We experienced the earthquake, I want to say, about 4 or 5 years ago. Typically, we don't experience that type of exposure, but here again, you'll have to sit down and talk with your insurance professional, because you can get covered. It's just about the amount you're willing to pay in premium, more than likely. The business owner's policy package, property insurance, business interruption, you can package all of these things into one. But if you're a small business, you may need to look at, you may look at trying to have a one-stop shop, but you may be able to split out your individual needs on what you're trying to grow your business into. And as you grow your business and as you grow your inventory, then you may want to try to take on a little bit more premium that you're going to have to pay out. Because remember, risk is going to be commensurate with return. So if you're trying to limit your exposure, limit your premium while increasing your profit margin, and have that difference between your overhead of your premiums that you're paying, you're going to have to probably look at that on a year-to-year basis based on the profits that you're experiencing and your fiscal year reports from year to year and your business plan. It does not cover professional liability. Liability claims arising from wrongful practice by professionals, auto insurance, workers' compensation, health or disability insurance, all of which would need to be purchased separately. So this is oftentimes a less costly option for small businesses than buying a set of individual policies. A home-based business or company with only a few employees may start out with a BOP and then expand as coverage grows. Now, in particular, if you have a homeowner's policy and you think that your homeowner's policy is going to cover your business needs as you have an automobile policy, your automobile policy and homeowner's policy in first party is designed to cover your liability, meaning you as an individual. You are the named insured, you're the driver. It's not designed to cover commercial usage. So typically, if you have a homeowner's policy and some people run their businesses out of their homes, their loss is limited. Say there may be a clause in the contract that says, if I experience a business loss, it's not covered, or I'm covered up to $1,000 for business inventory. That's why you would have to have a separate business policy versus having a homeowner's insurance policy. Now, I've seen it done in the past, but people are oftentimes shocked when they find out that they're limited. And a lot of people are doing at-home businesses over the internet, and they're using internet sales and they're trying to write off various expenses, you need to check with your insurance professional to see if your software and all these things are going to be covered. Because here again, if you experience a loss and you're running your business out of your home, some of that software and electronic media data equipment is going to be limited. And it's going to be limited to specific and set rates, because now we're dealing with the internet age. And many people are running businesses out of their homes. So I would dare, this is just a word of caution, all of your data processing software may be limited if you're running it out of your home and you're thinking that you're covered under your homeowner's policy. Commercial automobile insurance, if you have drivers, professional drivers, that are delivering products, goods, and services for your business, this is something you need to think about. Here again, how often and what's the usage of each employee? What's their driving record? How far are they delivering the equipment? Are they going only in DC? Are they going to Maryland? Are they going to Virginia? Hopefully you'll be able to vet them properly to see what their driving record is, and do your due diligence as the principal of your business to find out what capacity they have to deliver your goods and or services safely. Commercial health insurance. Now here, the other speaker is going to touch on the Affordable Care Act, but here's just some quick things to think about when purchasing insurance. The Affordable Care Act is going to, if you do not purchase insurance for your employees, you may pay a fine. Health care reform includes several benefits for small business owners. Small business owners may be eligible for a 50% tax credit if they choose to cover their employees under a health insurance plan, or a 35% credit for small tax-exempt employers. The tax credit is available for small businesses that have less than 25 full-time employees. The credit is available for eligible employers for 2 consecutive taxable years. And I'll let my speaker make sure that I'm okay on that. And then to be eligible for the credit, the small employer must pay the premiums on behalf of the employees enrolled in a qualified small business health options program or qualify for an exemption to this requirement. So you're going to have to fall under this particular criteria under the small business health options program, or either come up with some type of exemption as to why you don't need to fulfill the requirements of the act. Small businesses that have less than 50 employees or less are exempted from all employer mandates that provide coverage in the new reform law. DC HealthLink has made it easier for small businesses to offer expanded health insurance options for employees without an undue administrative burden. DC HealthLink also allows small businesses to obtain competitive rates and not be subject to the inflated prices for the same coverage offered by larger companies. So if you have not in your DC-based business, check with the DC HealthLink exchange and see what type of rates you can get for your employees. Short-term and long-term disability. I think that probably as the principal, this is something you may need to be worried about versus your employees if you're just a start out, because if you become disabled, who's going to run and operate the shop if you're not there? Do you have an employee or partner that is competent and you can recover and do rehab and be comfortable with the decisions that they're going to make that are going to impact your bottom line? So short-term disability, 3 to 6 months. Long-term, you're going to have to be unable to work for 6 months. Now, with these policies, there's one thing that you need to keep in mind: the definition of disability. With each contract of insurance that you purchase, based on your business, there's going to be a definition that insurers provide as, are you able to work 10 hours in your profession? Are you able to fulfill 20 hours in your profession? That's going to have an impact on the percentage of income that you're going to be repaid while you're disabled. And you're going to have to document that disability through your healthcare providers. And also, typically, there may be an elimination period for the disability insurance to kick in. An elimination period is just a set number of days before the coverage may kick in. It may be 15 days, it may be 30 days. That's where your private savings will come into play. So you have to hit that period first, document your disability, submit the claim to the insurance carrier, and then get reimbursed. Particularly for small businesses, this may be a concern, as I said, for the principal versus the employees. You may want to think about this later on down the line. And believe it or not, disability claims, if something happens to, whether you're typing and you injure your hand, or you become injured and you go out and do sales and you're unable to meet your clients, that's the type of insurance that you may want to think about having as the principal of your operation. Group life insurance, this is something probably, you can get it for the group and for the employees, but in the event of your demise, one thing is for certain, everybody in this room will die. I hate to break the bad news for you. Everybody's going to shut their eyes for the final time. So if you have partners, and this is something that you're going to have to kind of navigate through very carefully if you have business partners that are married and or have children. If you have a partnership versus a LLC versus a LLP, how your business is constructed, there have been many, and there are many fights going on right now because of the lack of estate planning once one partner and or business owner dies. And then, how are you going to set up your life insurance? Do you want those proceeds to go back to the business? Do you want it to go to your spouse, etc.? But these are some things to think about as you go through the process of making the decisions on how you want your operation to continue in the event of your demise. Home-based business insurance, exclusively run out of your homes. Like all businesses, should be properly insured to protect the assets. But here again, you're going to have to look at what you're writing off, and I'm sure that the insurance company is going to want to see a copy of what inventory you're writing off, what's the space usage for your house that you're determining as your office, your home office. Because here again, this may be limited under your homeowner's policy, and they're going to want to make a big distinction between what's your private home versus what's your business. So that's the biggest thing you need to, if you have a home-based business insurance, this will alleviate a lot of the confusion that typically occurs when you submit a claim, whether it be for your homeowner's insurance policy or your business, home-based business policy, because they're going to be two separate entities with two separate deductibles, and the deductible is going to be your obligation that you need to fulfill prior to the first $1 being paid by the insurance company. If you have any questions, you can contact our office. Our website is disb.dc.gov, 202-727-8000. Make sure you look over all of your books each year. I cannot impact this enough, because while working in the private sector, I have gone out to businesses, and you would be surprised if I showed up at a total fire loss where I've been handed a shoebox, multiple shoeboxes, full of receipts, no ledger, and trying to document the inventory, the income through a total loss of a total loss fire is extremely difficult and tedious process. So I would dare say, at a minimum, you need to have QuickBooks. I say at a bare minimum, because if you experience a loss, you're going to want to be indemnified, and there may be problems or situations and hiccups that occur when you're trying to get dollar for dollar what you think your sales have been for that period or that time period. Particularly internet sales and things like that. You need to document all those things. So thank you for your time. I hope this was informative presentation, and good luck to you all.